Good afternoon, everybody. Welcome to Trader Merlin for your weekend edition, the Trading Week Wrap-Up. I'm excited. A little fresh glass of whiskey here for you. So cheers all. Hope it was a great trading week for you. At the end of this, I'll run through some of the trades that we had talked about on this program. So I have an account that I'm sharing all those trades with you guys to kind of see maybe what my thought process is, kind of how things are going. And that's just, it's one account, but I figured nice to share things with you as well and just let you know how those trades are going. So we'll share the winners and losers as we progress through that account. But for me, mainly, it's Trading Week Wrap-Up. What do we got to talk about for the upcoming trading week? Let me have a sip of this whiskey and I'll tell you. First and foremost, I'm trying to get a sense as to what the pulse of this market is. Where are we going? What's the direction? Lately, I've been really on more of a bearish tone because of technical factors and the uncertainty that's facing this market. I will say that this week made me feel much better about the current situation and calmed a little bit of my bearishness. I know it seems kind of crazy. And where would that stem from, right? I'm curious from your perspective, for those of you that are out there, what would you look at from this week's data, news, events that have happened that would push yourself to more maybe positive tone? What was it this week that, from your perspective, if anything, that may add a little ray of sunshine into a fairly cloudy week? Now, I will start off with a little bit of humor here for everybody. As you guys know, while I wait for you to type in your responses, as you know, I love using AI. I use a program called Midjourney to create the graphics for the show so I don't get dinged by Google for copyright infringement or Associated Press or whatever. So I said, create me an image for a flat trading week, something that was somewhat uneventful. I mean, honestly, at the end of this week, it really wasn't anything that exciting. I'll bring up a daily chart here just to show you. I know the podcasters can't see it, but here's your S&P 500. And yeah, we had a nice week, but really just kind of ultimately flat. Oops, sorry, I'm not even showing you. Flat and sideways. Nothing that was that noteworthy in my opinion, right? We had our Monday rally, Tuesday sell-off, Wednesday rally, Thursday sell-off, and today, pretty much unchanged on the day, which was a nice recovery. So, kind of boring. Can you guys imagine what image Midjourney came up with? And I said, give me a chart for a flat, kind of boring trading week. This is, I'm going to have to describe this for the people listening to the podcast. For Ed up in San Jose, I will explain what I'm showing the audience right now. I asked for a flat trading week from Midjourney, and this is the graphic that it gave me. It's a bunch of monsters like melting together with jaws and crazy eyeballs. Just this, I don't even know how you would describe this picture. It's just a giant mess of monsters and demons and ghouls and teeth and eyeballs. Totally bizarre. Absolutely bizarre. So anyway, I thought you would enjoy that flat trading week. So let me go back into the discussion here and asking you what might have been the driver of prices. Tomasino says positive crypto news. Palantir today was a great trade. March options expiration now out of the way. In a previous downswing in Q1. Okay. That could be as well. Like the cryptocurrency is getting talked about. Wow. Okay. So here's what I took from it. The Jensen Huang speech, which I thought was very important. It sets the tone for the driving force for our markets right now. And our markets right now, and again, this is my opinion. I may not gel with yours, but my opinion is that the markets right now are driven by technology. And if there is a shift in technology that increases productivity, that shows more promise, then that to me means that we should see more promise and prospects within that industry, which has been the piece that's leading the market up. So Jensen Huang's speeches that he gave at Nvidia, as well as others on different news outlets after the fact, painted a picture of, I hate to use the word, but like a digital, a technological utopia, where he's talking about shipping, 35 million of these Blackwell chips, which means the demand for his products are so off the charts that every other tech firm out there is like, we're going to be using this AI. And we're starting to see those realities of AI hitting the bottom line. So to me, the technology part is kind of what's turned my sentiment around a little bit. Now, let me bring up, I know, there's this things, guys. This show is all about my opinion, so I apologize if sometimes they don't, you scratch your head and go, what the hell is he talking about? But, here's Nvidia for the week. It was a down week for Nvidia, surprising. I actually thought we'd see a nice big up week for Nvidia. Nvidia the last 4 days have been really flat. On Tuesday, when Jensen gave his keynote speech at the GTC conference up in San Jose, Nvidia actually tanked a little bit. And I ended up selling some more 112 puts. By the way, all my puts expired worthless today on Nvidia at 112. Was great. That ended up being 1.5% for the week rate of return. That's why I love options, guys. I made 1.5% rate of return for the week on the capital I outlaid for this one. And it never even got close to my exercise price. I wanted it, for goodness sake. I wanted Nvidia at 112. I was kind of hoping I would get it, but instead I got paid to take that risk and see, I'll buy it if it gets there. It never even got close. I still collected 1.5% rate of return, which is 100 times greater than what JP Morgan Chase will pay you for a year by keeping it in your savings account. So that was one trade that wrapped up today. We'll talk about some others here in just a second, but his comments talking about innovation, talk about technology, I think has rejuvenated a little bit of a buzz in that AI sector. And maybe that's part of the reason, I saw somebody talking about Palantir today. Yeah. Remember I'd sold those $75 puts on Palantir. Kind of wish I got it. I didn't. Now you're back up to 90 on Palantir, up 4% today. But, I'm looking at other companies that are in that space using AI, and these are all ones that I wrote about in the article. Companies like Intuitive Surgical. Now, Intuitive Surgical is at a steep discount right now compared to what it was back in February of this year. If you go back to its high on February 19th, ISRG has fallen over $100 per share, now 19%. To me, these guys are at the forefront of medical AI, technology, robotics, and I don't know. I envision a future 10 years down the road where it's a doctor is in the room just watching what they do, but the robots do everything. That's where I think we're headed. I think this one's really struggled. UiPath has been another one that was on that list, using AI technology to do automation and set up infrastructure where it's very easy to update assembly lines and products and services. That one has been down aggressively as well. Now, what are some of the bigger players that would be using this technology, AI, and those Blackwell chips? Well, you have Tesla, which I still think is a great buy. However, I'm still a little bit worried, and I don't know the actual outcome here. I think many people have differing opinions about Tesla. I would say I'm a Tesla fanboy as a company. I love Tesla. I love what they're doing. I don't own a Tesla, not yet anyway. I actually wouldn't mind owning a Tesla, but now I'm really concerned that people are going to vandalize my property if I buy a Tesla for no reason. Really kind of lame to me. I think it's really pathetic. Anybody who's out there vandalizing a Tesla for their angst about Elon Musk. That's a different way to do things. But anyway, Tesla also would be one of those companies I think benefit significantly from more purchases of NVIDIA's products. Now, one thing that's, I think, unique here, and I don't know where that line gets blended, is Tesla is buying a lot of these NVIDIA products for their services and their infrastructure. Is there overlap today where X is using Tesla's servers and services, or does X have its own rack systems of these, Blackwell chips? I think they had 50,000 at one time. And the reason I ask that is the AI infrastructure that I'm so big on, I'm so enthusiastic about, I don't know where that technology is mainly residing. Is that something that belongs to Tesla, or is it something that belongs to X or some other entity that Elon Musk controls? Because as we look at what OpenAI is doing, OpenAI is getting a tremendous amount of attention, monster valuations. We're talking the tens and tens of billions of dollars valuations. And I have used OpenAI. I've used Grok. I have not used Claude, by the way. I really would like to use Claude. I've heard good things about it. And I found benefits of both of them. But in the last 3 months, since this feud between Elon Musk and Sam Altman has escalated to the crescendo here with litigation, Grok has gone absolutely parabolic with regards to innovation and technology and being in my opinion, Grok right now is way better and exponentially faster than ChatGPT. So I'm a paid member of ChatGPT. I have 4.0. I pay for that. And I have Twitter. I pay a monthly subscription for, so I can get that little blue box so people know I'm not a scammer or a fraud. You can have a conversation with Grok like a normal human being. I don't know if anybody here watched the Joe Rogan interview of Elon Musk, which is kind of off the hook. It's pretty funny. But you can have a full conversation with it with minor pauses, whereas ChatGPT, it takes a while to get some responses depending on the complexity of it. So I think that the other piece of this could be the sheer AI infrastructure of X, which may overlap into Tesla. That's why I'm bringing up that one. Yeah, right, Jeff? I mean, it's not like it's been better. It just, in the past couple of months, it has just got absolutely, and I really do think it's Elon Musk going, oh yeah, Sam, well, screw you. You know, you lied to me. I'm going to beat your company. I'll beat you at your own game. I love it. Absolutely love it. Yep. What did Big Ed say? The new F-47 jet will utilize AI technology with a single pilot to control drones as a fighter group. Wow. Man, you know, the future, I hate war. I don't like war because there's always a loss of life, and it's unfortunate because in many cases there's innocent people who die in war. However, I do love old war movies, and I'm curious to see what the future of combat looks like. You know, I really do think that in my lifetime, we'll get to the point where it's no longer human lives at stake. It'll be some 15-year-old gamer sitting in a Colorado bunker in a hill somewhere, controlling a whole fleet of drones, military attacks, and then it becomes down to one concern: who can manufacture the robots and drones faster? And if that's the case, we're in trouble. We're in trouble because China's got us beat on that one, guys. China can crank out, I don't know, 100x what we can technology-wise. All right. Sorry. Well, now we're off the rails on that topic. But Big Eb, yeah, that's pretty interesting. Part of me loves it. The other part of me makes a little bit concerned. Concerned that, you know, we're having AI run airplanes and pilots. You know, I like the human element there, but that's just me. So, you know, I look at this week and I'm really, I could go deeper into these companies that are playing that AI space, like Meta, like Microsoft. I do think that could be a really good buying opportunity for us here. Now, here's the big conundrum, and it deals with, you know, market analysis. We have looked at these charts over the past couple of weeks, and I've been going through with you kind of my belief on, look, we saw this big impulse move down, and it broke the upward trend line. Now all of a sudden we're getting that little pop to the upside, which retraced back in an overhead supply zone. So it's like, okay, criteria number 1 is met, criteria number 2 is met. Now we had criteria number 3, and I'm waiting for that fourth piece. I feel like it's this inflection point. Like, either we're going to hold this supply level that's on your screen right now, and for the podcasters, that's between 57.24 and 57.60. We're either going to hold that and continue down where I have this line drawn, which feels like the most logical path, the path of least resistance. However, if there's a lot of people out there that believe what I just mentioned, that, you know, technology is very undervalued right now, that some of these companies are real cheap, and buying into, you know, a Microsoft, a Tesla, an Amazon at discounted prices is a good deal, you could see this level just get evaporated next week if some more positive sentiment comes into the equation. Now, I did see, I think it was Andres posted in here earlier about what was kind of the catalyst for the week, and I thought that was pretty funny, Andres. He says, no additional tariff announcements. True, right? That conversation is kind of quieted down. He's actually been rather polite in his comments and conversations this week. So, you know, that certainly is a factor. You know, if we can put some of that tariff talk behind us or settle some of this, you know, the markets may have a nice big rally here. So I'm torn. I have long positions. I have short positions. I'm short the S&P, which I'm down right now, I think 3% on. No big deal. But I have some other trades that are far eclipsing that one. So I'm not too concerned about that. Watch the movie Ender's Game. I think I did see that one. Unfortunately, I'm trying to not watch a lot of movies. I used to watch like a movie a day. I was just kind of, my end of day process was just watch a movie. And I've watched so many movies, I couldn't tell you what movies I watched. It just kind of fills that void in my head to make it stop thinking. But I think I saw Ender's Game. Pretty sure I saw that one. One of my favorites when I was a kid was War Games. That was an interesting movie about a video game killing kid that starts a nuclear war.
Shall we play a game?
I think that's how his voice went. Looks like me, so I can be in two places at once. Are we? Looks like you. Two places. What happened with the New York Times? Don't know. Didn't pay attention to that one. Boeing won the contract. Oh boy, $300 million per jet. Okay, let's. we're digressing here. We're going on a different path, but I'm going to go down that path with you. $300 million per jet. Now, I'm pretty sure that for $5 million, I can build a sick, amazing drone that may not have as much firepower with it, but it's $5 million bucks. If it gets knocked down, it gets knocked down. And if I'm paying $300 million for a jet, let's make it $10 million for the drone. I mean, $300 million for each jet, and it would cost me $10 million to make a drone, which I think is ridiculously expensive anyway. Then I could have 30 of those drones for one jet. At a certain point, you run into a problem of numbers, right? The large number theory. And can one of those jets take out 30 drones? Or can one drone take out that jet? Then it's a simple math equation. I don't need those jets anymore. And this is one of the things that concerns me about China is, I don't know if you guys have seen the drone displays. The drone displays that China is doing, where there's it looks like 50,000 drones creating really cool artwork in the sky. That's cool. That's great for entertainment purposes. But what happens when the drones are dropped on a city and all of a sudden each one of those has an explosive ordnance or something like that? Crazy. Yeah, I don't know. The future's going to be absolutely nuts. Lockheed Martin created on the announcement, so I assume that they're a potential contender. Let's look at LMT. I didn't see that one. Oh, wow. Yeah, down 5.79% today. So Boeing got it? You know, if Elon Musk has proven anything, it's that Boeing is incapable of running an efficient business. I'm actually listening to the Elon Musk book right now. Very good. For those of you who are haters of Elon Musk, I think you should listen to the book because it paints a picture of ruthless dedication and obsession to accomplish goals. And I don't have a problem with ruthless obsession to accomplish goals as long as those goals are in line with what I think, as long as they're on the right side of morality, I guess. Lockheed Martin will protest the award for sure. Yeah, I can absolutely see. Michael Trammell in here. Boeing got contract after leaving astronauts for nights, which is crazy. Well, so Michael, if you look at the story behind that, Elon points out many times that he tried to go to the Biden administration, and who knows the validity and honesty of these stories, but politically, Biden didn't want to have Elon Musk do it because Musk was behind Trump and he couldn't allow him that victory. Politics is terrible. Those astronauts should have been brought back long time ago. Absolutely long. They should have been, their contract should have been, a month? 8 weeks? Something like that? 8 days? Be done. Duct tape those Boeing jet doors. Well, part of the interesting discussion in the book with Elon Musk, or about Elon Musk, is that the government has this kind of policy where it's like you almost get rewarded for delaying your delivery times. And if you complete your project, well, you don't get paid anymore. So just keep building something and keep getting paid during that process. Whereas, I'm the type of person, as I think many of you are, where it's like finish a project and that's when you get paid. So there's incentive to do it faster. There's incentive to reduce your cost because I have this target deadline and I'm getting paid when I deliver, as opposed to this just forever manufacturing process. You get paid overages and all kinds of extra perks for delaying it. I don't know. Hopefully we'll change those systems as well. Yeah, well, we talked about Boeing as a company, and I talked about buying this thing at 140, and I did not because the $10 per share. We look back here at their earnings, and they were losing $10 per share. That to me is a recipe for disaster. If those numbers continue, there's no way Boeing can sustain that. They'll get a bailout. Their last earnings were negative $5.90 per share. We have earnings on Boeing coming out Wednesday, April 23rd, so coming up here in a short window of time. But these guys, I'm going to go back for the podcasters and just read the numbers on their earnings. So back in January of this year, they lost $5.90 per share. Back in October of last year, they lost $10.44 per share. Back in July of 2024, they lost $2.90 per share. Back in 2024 April, they lost $1.13. They haven't made a profit. They lost 47 cents back in January of last year. They lost $3.23 the quarter before that, 82 cents the quarter before that. I have to go back years before I find a moment where Boeing has actually made a profit per share. I'm still going, by the way. I'm clicking. They lost $7 per share back in January 2022, just, this is like an Easter egg hunt. The last time that Boeing had a quarter where they reported earnings, they actually made money per share. They made 40 cents per share, and that was July 28th of 2021. I mean, that's 4 years ago. 4 years of running a big, monetary loss. That's remarkable to me, and that's why I did not buy in at 140. I wanted to because I agree with some of you here that I believe Boeing is too big to fail. It's one of those airline companies that is just too important for America. It's our major manufacturer of airplanes. We got to have it. But man, as Jeff says, aren't they too big to fail? That's kind of why I was thinking of buying them. But it's shocking that you can look back 4 years to try to find the last time they made a profit. Wow. Unbelievable. Whereas you look at other companies, I mean, let's, look at, of course, this is an outlier, but, you look at Nvidia, and, Nvidia is not making huge money per share. They made 89 cents last quarter, 81 before that, 68 before that, 61 before. So you got at least growth and consistency here. Now, there is a certain point on this where Nvidia had a loss. I will go back here and try to find where that is. It looks like their transition is going to happen right about here. This is making 5 cents back in August of 2022. They made 5 cents in August of May. So, yeah, getting back into 2021, still not to a loss yet for Nvidia. This goes back to Larry's talk about fundamental analysis and finding out what companies you want to buy into. I mean, I'm all the way back into 2019, and I still haven't seen a loss on Nvidia's earnings reports. Yeah, they're only making 4 or 5 cents, but this is the company you want to be owning, is a company that's making money as opposed to one that's losing money. How could a nail out impacts? You mean a bailout? Scott, I love it. It says Boeing, magic with accounting for sure. Well, I think, and I don't want to polarize the audience here, but I am a believer that we have massive waste at a government level. I believe that ever since I was a kid, and I'm sure this is the same for some of you, ever since I was a kid, it's always these running jokes of, I can go to Home Depot and get a hammer for $7, but for the government it costs $300 for the same hammer. Well, why is that? That's because of inefficiencies and the way things are done and just lack of accountability, and nobody cares. So I do think that a large part of Boeing's losses is just a lack of care, because they're going to get paid anyway by the government with these huge contracts. So who cares? If we lose money, we're still getting these big contracts. We'll take that. That part bugs me. I kind of hope that that stops. I would like to see where if you are a government contractor, you get paid on completion of a project. Because if you are encouraging someone to build that project forever and never really deliver, there's no incentive to use optimal costs. There's no incentive to finish it faster. There's no incentive to, use current technologies and innovate or come up with solutions that make something better. And that to me is the quintessential United States is you make things better. You take something, you improve it, you make it better, and now you have a new standard. And then you keep improving that and that and that. Which again is kind of why I'm a big fan of crypto and digital assets, is because it's moving so quickly, but it to me, it built on what America was built on, which is build something and then reanalyze that and then make it better, and then build it again and make it better, and then build it again and make it better. And look at the automotive industry and so many other places. But when government's involved, it always seems to be stagnant and fraught with problems and over delivery schedules, etc. Anyway, no more politics. I'm moving on. It's the whiskey talking today. All right. So going back to the discussion at hand, which for me was why I'm optimistic, it's Nvidia. I think Nvidia really stoked the fuel fire here that says technology is the place we're going to want to be. Now, that said, let's go look at XLK or the Magnificent Seven. They all look pretty bad. I mean, here's Tesla. Tesla is a can of worms that I will play probably next week, but I think it's just a little too risky. It breaks my heart is not the right term. I guess it makes me mad as hell to see people destroying dealerships and vandalizing people's cars, and that really bothers me. But I don't know if that's going to subside anytime soon. There is this hatred for Tesla. whichever side you're on, there's a hatred for Tesla, and it's just too much of an uncertainty for me to want to jump on Tesla right now. I'll probably sell puts on this one next week, but do them a little further out in case I do get caught. This could, on their next earnings time, could have some problems. And by the way, Tesla's next earnings is going to be April 29th. So I've got a few weeks of weekly options where I could collect a lot of premium, but I don't want to, I certainly won't be holding through the earnings. I'm a little concerned that these numbers could be impacted by all these attacks and strikes. And Edmunds released a thing today saying that there's a record number of Tesla owners turning in their cars saying we don't want a Tesla. And I'm like, oh, you're long, Margaret. I would say just be careful. It is just really, really risky because of you just had this amazing shift in sentiment within a 3-month window of time. It went from this amazing company that the Democrats and Republicans are both on board with, and now it seems like it became a political tool. Oh, for the longest time, Democrats were like Tesla electric, Tesla electric, Tesla electric, and now that Tesla or Elon Musk is doing what he's doing, hate Tesla. Gotta love politics. So I would shy away from that one. Again, Nvidia, I do like it. I've been selling puts on that one, and I had my shares taken away last week, which is a bummer, but I'll get more. I think Nvidia will probably bounce back here and do pretty good. Yep. Naum says autonomous technology, robotics in 2026. I think robotics 2025. Right? I think that industry is going to grow at exponential levels. I'm very curious to see what happens next year at the Nvidia GTC Conference. Right? We just had it. Next year, we get that full 1 year to see what innovation looks like in a year. And I think that we're all going to be just floored by how quickly the innovation's happening. Now, one thing, I don't know if you guys saw Colin Tedard's post on Twitter. Cheers, Colin, if you're watching. Colin was talking about one of these other manufacturers. I didn't get the name of robots. And they're pretty amazing what they can do. They are fully articulated, can do all the normal tasks. And I told you guys, I've got money saved right now, and if that robot comes out at $100,000, he may be running my show for me, or she, it, whatever my robot's pronouns need to be, so no one gets offended. I will have a robot doing my dishes, doing my laundry, sweeping my floors, walking my dog. I mean, my robot will be doing all that stuff I don't want to do. Hell, I'll probably switch the show here for you guys so I don't have any mistakes, right? When that happens, I'm on it, absolutely. And I thought it'd be Tesla, but it looks like it could be somebody else. They're almost there. That innovation's getting there, and I do think robotics will be the huge talk. That in conjunction with AI, bring it on. So running through our tech here, because we talked about potential tech bounces. You look at NVIDIA's chart, it does not look great, right? The big argument that I've been making with you guys, and at least my opinion, is NVIDIA is now making lower lows and lower highs. We just made this peak this week. On Monday, there was a little high made here. To me, that's an important pivot swing high. If we break down below 104.95 on NVIDIA, I think you got a bit more downside movement because the trend right now, at least since December, is lower lows, lower highs. So not great, but I feel like we're almost, let's do this. I'll do this on NVIDIA. I'll put a little channel box in here that goes from those lows to the high we saw on Monday. And, to me, that's a critical box, a critical important place for us to be in. If we break above that, then I think you're going to see the whole tech sector rally. Right? I think this will bring everything up with it if NVIDIA can get above 122.89. If it's kind of goes sideways here, well, I think markets will slowly drift lower. And of course, if it breaks down below 104.95 or 104.77, then I think you got more downside movement. So that to me is the most important one to watch because this is the picks and shovels of the gold rush. Microsoft's a big consumer. They don't look very good either. Meta's looking pretty ugly, although Meta came right back down into those lows we saw from back in December of last year, kind of a perfect buy point, and it bounced nicely today and yesterday. Google also, although Google has their own problems with antitrust, competition, selling off of Google Chrome, that might impact them a little bit more, so I would sidestep Google and not look to buy that one. Amazon, look, I think Amazon is one of the greatest companies ever, and I think finding the right buy point for Amazon would be good. At this point, you're looking at a pretty significant decline from its all-time highs. I'll bring that chart up here for you guys to see it. Roughly, I know it's not exact, but roughly 20% slide for Amazon. At one point, we're down almost 22%. As of today, we're only down 19%. I think that's a great deal. Amazon continues to innovate, continue to grow. Fantastic company. And of course, Apple, who I don't like. Looks one of the weaker of the bunch because it's been making new swing lows and dropping and dropping and dropping. So I am cautiously optimistic that Nvidia can spark a rally here. If not, then I've got my S&P short, and I will continue to hold that one until I get stopped out. Look at that SPY. Let me bring up SPY here so we can show you where that level is. Basically, for me to get stopped out of this, which I hope I don't, but if SPY gets to 570.95, call it 571. If we get to 571, then I'll have to close out my short position on SPY. But for now, I'll take it. I think it's going to have a lot of volatility. I'm really kind of straddling both fences here, long and short, because I just don't know which way this thing's going to run. Crazy. What are you guys talking about right here? Then you could finish the book. Thanks, Big Eb. I know. It's pretty embarrassing that I haven't finished that book. It really is. It really is. Making sold my Tesla position today. Don't want to hold while they have the Tesla takedown on March 29th. Yeah. Is that the date? Is that an official Tesla takedown date, March 29th? Stupidity. It just is stupidity for me. Let's see. I'm waiting for the sellers to bring me the most amazing car at a fearful hater price. I like that too, Scott. Yeah, unload your Tesla in panic and I'll buy it from at a very discounted price. I'm okay with that too. I really wasn't expecting to buy a Tesla, but if all of a sudden the market's flooded with used Teslas, the price for those things are going to be real cheap. Question is, what would I buy? I do like the X. I like the X. I like the gull wing doors. I don't think I need the plaid. It's not me to go race a car. So as long as it's reliable. Can I pre-order the book? No, Gary. That would just put too much pressure. I got to finish it. I got to finish that thing first. I'll let you know. Just keep bugging me. Keep bugging me, and maybe I'll finish that damn thing. What else was out there? So let me just real quickly go through some trade results here. Just again, the trades that I've disclosed to you guys and kind of been explaining. The Model S is the best. I like the space of the SUV one. I know they look stupid, looks like a bad looking Beetle, but I'm a utility kind of person. I like to lug things around and go to the store and pick up big items. I can't really pick up a sheet of plywood in a Model S. Looks cool, but I need more utility. I'm not going to buy a Cybertruck. That's out of the question. But wait till the semis start rolling out. Yeah, love that. I've seen some videos of the semis now. That looks amazing. And for me, as someone who drives from Southern to Northern California, oh, please make it happen. I am so sick of trying to pass trucks where a semi, it's a 2-lane road for the I-5 going north, right? And it's a 6-hour drive of just nothing but 2 lanes. And the semis will literally pass each other. And then I think they're just having lunch. They're talking to each other, waving, hey, how you doing, Bob? I'm just stalling traffic doing 55 miles an hour. There you go, Gary. I take the hounding as support. So yes, we're both speaking the same thing, Gary. I do appreciate it. I've got a few of you who've been bugging me about it, and it's a good thing. It's a good thing. At some point, I'll finish it. I get all fired up to write it. I start writing it, and I just get bored, and I go, this is lame, and I just stop. So I just need to finish it. So let me go into some trade results here. Just the few that I currently have that have closed out today. One of those was interesting. So I have, let's go to... So I've got MicroStrategy still open. Now on paper, it looks like a huge loss, right? We're at 304 right now. So I have some MicroStrategy at 350, 352, 320, and 305. And the 305 is still just barely underwater by now 30 cents. But on all of it, because of the premium I have been collecting, I'm actually positive on the position. So at this point, I still have 600 shares long of MicroStrategy. And I keep selling these 350 calls against that position, which has been not a lot of premium over the last couple of weeks, but I was very fortunate back here on, what day was this? On this Thursday here, when we spiked up to that kind of what I thought was a supply zone, I sold the 350 calls again, got great premium, and I still have 600 long MicroStrategy. So that one will still be open as of Monday. I did not sell calls today because I kind of feel like over the weekend, same thing I thought last weekend, is that we're going to get a pop up, a gap up in crypto over the weekend. But we didn't get it last weekend. Maybe we'll get it this weekend. I just feel like crypto has been just languishing. And with all the positive stuff, I do anticipate it being a little bit more bullish. So I held off on selling calls against my position with the expectation that on Monday over the weekend, the spot market for crypto will have a bit of an up move, will gap up, and maybe I can get some really good premium on MicroStrategy for next week. So that's one position. SMCI, I had sold the $39 puts. I collected over $1 for a 5-day window of time. That was a roughly 3% rate of return for a week. That one's closed out. That was great. I had quite a bit of that one, so I was happy with that. I almost wanted to sell it again because technically, when I look at SMCI right now, look, we all know SMCI is very speculative, right? Speculative is really, SMCI, really dangerous because there's all these unknowns about their numbers and are they being truthful and did the auditor do the right job? It still is a wild card. That said, I have been trading this thing pretty much weekly, selling puts against it. When I get exercise, I sell calls against it and been doing very well because the premium is just off the charts on this bad boy. So I had sold the $39 strikes. We close out today at $42.58. I get to keep my 3% worth of premium. That one's done. We talked about the Nvidia. I sold the 112s on Nvidia. So that's the red line in the middle here. I'd sold the 112s earlier this week. I think I had some last week and maybe added to them this week. I can't tell. I do too many damn trades. But that ended up being about 1.5% for the week. And those are all selling of puts. The only one that I'm directional on, I have Oracle, where I'm long. I bought calls on Oracle. And I have SPY puts. So I'm long puts on SPY. Today was, started off really nice, but recouped most of that. Actually, ended up being a losing position on the day, down just a little bit on that one, but not worried at this point. My position isn't huge. I only have 5 contracts of that one short, but if it does start to fall and break those lows we saw back here on the 13th of March, which was a low point of 549.68, we break that, then I'll probably double or triple that position rather quickly on the break. I just need confirmation. No, I did not, Big Ab. I was kind of joking about that one. So I wanted to buy it pre-earning because I actually was expecting them to have good earnings. And it's actually a really good question. There was a question that came through. Let me bring up my email here. Apologize if I don't have these all set up into the materials. A question came in, I think, from Jeff. Let me make sure I get the props for that gentleman. And I'll read through a few of the questions here. Let's see. Question number 1 was from Jeff M. He says, in your comment regarding Nike, isn't it possible that Nike is just a $70 stock? He's like, Under Armour is only about $6 stock. Yeah. Don't think I'll be trading either. Well, I actually anticipated Nike having a bounce on their earnings. So here's the chart for NKE. I thought, I could be fine selling that $69, strikes here down near those lows. It hasn't seen, it's the lowest point it's been at, maybe get to 69, 68s. And I did not. I did not do it, thank goodness, because we had that big gap down on earnings, and this is kind of why you don't trade earnings, right? It's just really dangerous. Now, at this point here, what do you do? It had a nice day today after the gap down. So the gap down was savage, but it actually recouped and had a nice little green candle form. Does it close the gap? And this is just that blow off, right? That blow off where it just says, let's get all these people in short, freak them out, and then rip the thing up long. I don't know if you guys saw my post today on Twitter. Let me bring this one up here. I posted this one. I thought it was pretty darn funny. Oops. There you go. That's I made that graphic today. I couldn't resist. I had to do the just short it as opposed to just do it. Thought that was a good one for today. Jeff Mackey, who's a good analyst out there, he's a big fan of Nike, and he was just dumbfounded at what's going on with Nike, and I was surprised. So no, I did not make that trade. It's one that I wanted to, and fortunately I did not. It boiled down to just being a little bit uncomfortable catching that falling knife, going into earnings, knowing that something is probably wrong with Nike. I mean, the chart pretty much says it all. And I don't know exactly what that change has been. I don't follow them enough to know. I think it's most likely leadership or maybe some marketing decisions or just competitors coming into the space, Hoka or new shoe companies, whatever. Not a big fan of that price move, but at some point Nike will rebound because they're a good company and they're not going to, close up doors and just disappear. It's just not going to happen with Nike. You guys talk about Under Armour. Let's just bring up Under Armour for a second. Yeah, this one just looks dead in the water. I mean, there's two things I get from Under Armour's chart. Rather interesting, actually. You look at what's gone on with Under Armour going all the way back into 2022, it's just like stuck at these lows. I put a blue line across the bottom here, and it's like it just feels like it can't seem to break down below that $6.17 mark. Now, I don't know what's holding it there. Maybe people are just aggressively buying at that level, but we came down there close in September 2022. We came down there back in September 2023. Came back down there in July and August of last year, and now we're back at it again. Yeah, I wouldn't touch Under Armour. That just, I don't know. I just don't think Under Armour is as entrenched in sports and as a global name. Granted, they are a major name, and it's $6. Man, that does seem like a screaming deal. But to Jeff M's comment, it's just a price, right? And could that be too high? This is where I do not have expertise. There's areas where I have my strength and areas where I have my weakness. I'm sure some of you could probably tell me, looking at a current share price on something like Nike of $67, $68, what's its fair value, right? What is it really worth? And that's going to be a combination of many things, right? Obviously, you're going to look at earnings. They're making 54 cents per share on the latest earnings. They made 78 the month or the quarter before, 70 before that. $1 before that, 98 cents before that. So their earnings have definitely been dropping, but does it warrant that big of a drop, right? Going back to the all-time high, it's down over 60% at current levels, about 62%. So this is one where somebody like a Larry Jacobson or somebody who has a Warren Buffett mentality is going to look through the fundamentals and look at all those metrics and equations, and I'm not that smart. Sorry, I got my skill sets, but fundamentals isn't one of them. I remember when I had my finance class at university, when it came down to breaking down balance sheets, I could do it and look at the fundamentals, but I found it really boring. And then the other part about those things is I always had to believe that the numbers that were reported by the company were truthful. Now, for anybody here who has a business and personal and you do your taxes, you know that there's a lot of things that you can do and move money around. And I'm not saying doing anything illegal. It's all within this massive convoluted tax code. You can move money around and you can do sneaky little things. I say sneaky because it almost sounds illegal, but it's not. It's in the tax code, those loopholes, right? And I just don't know if I trust all the numbers. Nike has a $100 billion market cap. Under Armour is $2.5 billion. I mean, wow, almost, let's call it 40 times larger. I still like Nike. I mean, when I think Nike, I think sports, just period. Under Armour, yeah, it's involved with sports, but Nike has been the backbone of it for the longest time. And maybe their days are done. Maybe, Under Armour's that new up-and-coming contender. Or there's other companies out there as well. But how is other retail doing? So let's go bring up the retail sales numbers. I thought I had it up here earlier. That's earnings. Let's go to Forex. So I want to go to the retail sales numbers that came out for the U.S. Let's go to calendar here. And our retail sales numbers, these came out on Monday. And I'll zoom in here just so we can see what's been going on. Luckily for us, retail sales numbers were back above zero. Right? So we had that one-off, which was negative 0.9% for the month of February. All of a sudden, March, we come up at a 0.2. That's not a great number. The expectations were we're going to come out at 0.6. So we were well short of expectations, but I'll take as a consolation prize, we're above zero. That's important to me, right? Really important that it stays above zero for economic growth. Now, that's only the first time since this big decline that it's been above zero. Really, now it's a waiting game for retail sales. What it tells me is that overall, we should probably see weakening performance in retail sales stocks. Now, when you look at retail sales, there's a lot of different retail companies. Obviously your eyes are going to turn to something like Target, who is absolutely getting slaughtered now. I mean, Target is like back to the lows. I can't remember, when did they do that whole transgender ad campaign and the tuck diapers or something like that? Was that back in 2023 or was that actually back here in 2022? I think it was 2022. Man, I mean, right now, Target's sitting at $100. It's well off its all-time highs. I mean, we're talking probably down around 60%, 70% now. I'll go to the high here from there and to where we are today. Target's down over 60%. Wow. Unbelievable. So, and this chart looks appalling. You look at this fall we've had over the past month or two. I mean, just from the high in January of this year to where we are today, it's down almost 30%. That's pretty bad. Let's go look at Walmart, the king. It's struggling as well. If we go into a recessionary time, I think you're going to be looking at Walmart as a good thing. However, could that be people pricing in tariffs and knowing that most of Walmart's products are coming from China? Do the tariffs impact Walmart at all? And I would argue that may be the pricing in of those tariffs going into Walmart. You look at things like Ross Stores. Yeah, Costco. Costco is one of the greatest charts you've ever seen. Costco is just crazy, fantastic. But, look at these retail sales charts. So everything we've looked at so far, Target, Walmart, here's Ross Stores. Let's go into Nordstrom's. Oh, no. Nordstrom's. And Nordstrom's really oddly flat. That's a very bizarre looking chart on Nordstrom's, by the way. Since December, it's like literally done nothing. Anybody here want to do spread trades? Wow. You have the greatest spread trade I think I may have ever seen on Nordstrom's. Okay, Nordstrom's at $24. This is a crazy chart, folks. There's got to be something I'm missing here. You can see Nordstrom's is a $24 stock. And I will tell you that its range for the past, let's get the exact numbers here so we can, I love having numbers on my screen. For the last 58 trading days, right? 58 trading days, call it 5 trading sessions per week. So you're looking at almost 12 weeks. Nordstrom's has been stuck in a 49-cent range. Wow. Did it get taken private? Either way, if you can trade this right now, this has got to be the greatest spread trade of all time because it's not moving. Just perfectly stuck. I'm sure the premiums will probably reflect that as well. Okay. Wow. Anyway, so I was just trying to think of other publicly traded companies. Let's go look at Costco. Now, we talked about this one when they came out with their earnings last time on what the expectations might be. They're down significantly. I mean, they're down at 909. I thought when they came out with their earnings, we were going to get a 10-for-1 split. Didn't get it. They really should have to help juice the price of Costco higher. But from its all-time high here to where we closed at today, Costco is down about 16%. So we're seeing a lot of retailers absolutely suffering, and I think that's kind of reflected. Ooh, that's a good question. I'll check out Nordstrom in just a sec, Mark. A lot of retailers getting crushed. So let me look at JWN. Let's look what that volume is, because that is just an odd-looking chart. Volume's decent. You got a few million shares traded per day. Wow. But it's just so bizarre because look at the chart going into it. I mean, you have wild swings, wild fluctuations every day, some movement up and down like every retail stock, and all of a sudden, nothing. Absolutely nothing. Huh. Very, very odd. Let's see. What's how about AutoZone? No, I forget AutoZone's ticker symbol. AutoZone. AZO. No, their chart's not giving me a lot of data here. AutoZone Inc. No, this is AZO because I'm on a crypto tab. There we go. All right, so at least cars are doing good. I mean, that's a beautiful looking chart. Holy cow. Those that can't see this, those of you on the podcast, going back into 2017, AutoZone was $482 and it's now $3,600 per share. Surprised you don't get a split there on that bad boy. But we could go into a lot more retail stocks here, and I think that the story is going to be generally the same, that things are slowing down. This goes back to my discussion of the domino effect, right? If retail sales are struggling, and we look at companies like your Target. Let's just take Target, for example. What's Target going to start to do? They're going to start to do layoffs. They're going to start to maybe close a couple centers, which leads to more unemployment, right? And there's no way a company is going to want to expand or open up new centers if all of a sudden their chart is down like this and keeps on selling and selling and selling and selling. So at some point here, either the ship needs to turn and we start consuming again, or the lack of consumption from a retail sales perspective starts to impact the bottom line of these companies so much that they start to do layoffs. And then that all of a sudden creates this next domino, which is, okay, more unemployment, less consumption, and then retail suffer even more. So definitely something we'll keep an eye on, the retail side of this and what its impacts might be. But to be honest, that picture does not look very good on that retail front. What else did I have? There were a couple other questions. Let me see if I can read these for you. Jeff P., he's with us here today. Jeff said, is there, let me get the exact word. He said, is there validity in studying the inverse? Now, I thought this was a really interesting question. So here is the chart that Jeff had sent me, and this is the inverse S&P 500, right? There are ETFs that track the inverse of things, and you could look at, buying an inverse ETF. But to your point, Jeff, yes, I do think that there is some logic to it, but do you need to look at the inverse of this S&P 500 to figure out what's going on with the S&P 500, right? This is telling you the same picture. We've been looking at this S&P 500. Let me go back to the S&P. We've been looking at this S&P 500 saying it's broken its trend line. It's now making lower lows and lower highs, which is a bearish sign. So this overall is looking like that uptrend is over. Now, if I go back to the graphic that you sent me, which let me make sure I got the right one up here. Hold on. There it is. What we got the same story, right? We have lower lows, lower highs, and all of a sudden, just back here in early March, it's now broken above that. So, yes, there is merit to studying the inverse of things, but if you really thought these markets are going to crash, you could go buy things like SH. So SH is the inverse of the S&P. So if you really felt like, let's say you're in a retirement account or someplace where you can't short, well, you just buy something that is short. So here you could go long SH. Now the difference here is with something like SH, you're trading a security that's at $44, whereas if you went to SPY and tried to short SPY, it's $563 per share. This always ends up being a conversation. With people like, well, I'd rather go long the $44 market than go short the $563 market. And I always say this, it doesn't matter. It doesn't matter because if you make 5% rate of return on the SPY, it's the same 5% rate of return on SH. If it's a 1-to-1 ETF, 5% is 5% regardless of what the base price is. So if I'm just going to have to buy more of SH to accommodate that account size. So 5%, whatever rate of return, it's going to be the same whether your stock's $1,000 or 1 penny per share. 1% is a 1% rate of return. Let's see. What's your take on the Swiss bank lowering its interest rate to 25 basis points? I think they are ahead of the curve. The Fed has only 2 mandates, but as the Japanese Jerome Powell said, they do keep an eye on the market. I'll be honest, I was kind of surprised to see the Swiss National Bank go from 50 basis points to 25. Now, everyone knew it was going to happen. It was forecasted, and let's see if I can bring up Forex Factory here, and I will show you that one. Let's go to, that was earlier this week. Let's go to SNB. Where are you, Swiss National Bank? There she blows. That was yesterday, right? There it is. You look at it, and they've been aggressive. Now, remember, they were never as high as we were. They got up to 1.75 was their high. So we made it up to 5.5%. They did not get that high. So they're basically trying to stimulate the economy, slowing things down over there. Now they're not the same type of economy that we are, but also remember they're very different in a couple different fronts. Number one is you see they were down here at negative 0.75 percentage point for the longest time. So they're a little bit of an outlier when it comes to, I guess, hanging with the big boys, if you will. I think that they're an outlier from a central bank perspective. Do they know something or are they ahead of the curve? I don't know. I think that obviously there are very intelligent people that are running the SNB, so I assume that they know what they're doing. I think that in our situation that we have with our central bank right now, it's a similar case where they know what they're doing as well, and we're still paying 4.5%. And I think part of that is because we do need money coming into the U.S. We do need buyers for our bonds, right? We have to have buyers, so therefore let's keep the rates higher and entice people to buy bonds from the United States and drive more consumption. So they're a totally different economy than the United States is. So each economy is going to be cutting and tailoring rates to accommodate what their economy needs. All right, let me wrap up here. For Monday, from the economic calendar, you've got nothing going on Monday. On the earnings calendar, you've got, I think, two. I think you have NEO reporting. There's two companies reporting earnings on Monday, but none of them are really that important or that big. So for this trading week wrap up, I just wanted to share a few things. Number one, we got that trade results out of the way. Number two, we did a little bit of market analysis. And then we had our flat trading week, which is just one of the funniest graphics that has nothing to do with trading at all. And then, of course, I think that Jensen Huang's Nvidia commentary for this week really does tie the room together and give me a little bit more optimism for the markets going forward. And that, my friends, is the trading week wrap up. So I hope that you all have a fantastic weekend. Go do something fun. It should be a really nice, sunny weekend here in Southern California, finally. So I'm going to be out hopefully enjoying and getting some sunshine. So I hope you guys do as well. If you guys have anything you want me to talk about on next week's shows, let me know. Email me. Send them on in. I'm trying to get the people from Ninja Trader on the program. If in case you didn't hear, Ninja Trader was bought for $1.2 billion by Kraken, a cryptocurrency exchange. This is huge news. This is really big. You have a crypto exchange buying a legitimate U.S. financial market exchange. Don't you think it should be the opposite? Like, I would think that Ninja Trader would have bought Kraken, said, hey, well, let's get into the crypto space. Instead, crypto saying, no, we're buying that. Jeff, I don't have any brackets. Unfortunately, college sports has been one I've never really been good at. So, Tom Messina, get that dissertation done. I will start to think about getting back to working on my book. Cheers, everybody. Have a fantastic weekend. You got something you want me to cover, email me at tradermerlin@gmail.com or put your comments down below any of the YouTube videos. And if you're new, hit that subscribe button, hit the like button. Have a great weekend, everybody. I will see you on Monday. Take care.